Okay, testing 1 2 1 2. How's the audio? Am I nice and clear?
Yes, you are.
Thank you, sir. Good evening, good morning, good afternoon. All depends where you are. How's everybody doing? Are we
Good,
well?
thank you. Good, thank you.
Thank you. I trust everybody had a great weekend and everybody's ready, willing, and able to take on the new week. Um, okay. As usual, I'd like to start with questions. Uh, any any questions that you may have or comments regarding the markets? Uh, let's start there first. Anybody? Do we have any questions, comments? Maybe it's something that you've been seeing on the markets. You might want to comment about NFP, whatever it might be. Any takers?
Yeah, good evening.
Good evening, sir.
Yeah, it's me, Bruno. Yeah, I think I have one comment. It should be what are your thoughts with the city right tomorrow?
Sir, I beg your pardon. I just didn't hear you there.
Exactly, what are your thoughts on the CPI data tomorrow?
All the CPI data, extremely crucial. Extremely crucial,
Yeah.
extremely crucial. I think definitely we'll talk about it. Yeah, I think definitely. Yeah, it's something that we will look into. Does everybody know what CPI is? CPI?
You, I could not hold back. I get the given to give what I found the trade you are fair.
Hey, Mr. Raymond, it's impossible. How can I can?
I've I've been focusing mostly on technical, nevertheless.
Huh?
Yeah.
Don't let me down, man. Don't
Okay.
let me down. Yeah. Okay. No, we'll introduce everybody to what CPI is and its significance, right? Um, did anybody trade NFP?
Not really, I didn't trade the
Yeah.
NFT. Though I had some trade on though, but they were already on before the NFT. So when the news came, they just went to my ticket.
Ah, fantastic.
Before the NFT.
No, that's great. That's great. Profit was made. Some opted to sit on the sidelines. I always say if you don't trade, you don't lose money. Always the first thing that you want to think about is capital preservation. Always, right?
Sure,
Capital
sure.
preservation. So yeah, don't always don't be trapped into this FOMO, they call it, the fear of missing out. That's where things go yeah, a little bad for you. So if you didn't plan the trade, then you don't trade it. You plan the trade, you trade the plan, right? NFP, I don't know if I want to talk about NFP. I think it's a little too soon. Um, yeah, I think it's a little too soon to talk about NFP. I think I'll bring up this topic in the next coming couple of days, maybe 2 weeks. Then we'll talk about NFP and its significance, and so you get an idea of where the economy is going, right? So, like I said, this first week or two, we want to get the basics out the way, that foundation phase. Make sure that we are all on the same page, right? So, where do I want to start? Okay, I think if anything, let's start with formulating your checklist, right? Let's formulate your checklist. Does anybody know what a checklist is, or what do they understand the checklist to be according to them? Checklist. Let me see if I can switch my screen to a whiteboard. Lately, I struggle to use this whiteboard. I think there's been some changes made to it. Opening whiteboard. Okay, let's see if it'll work. Okay, it's loading it. Any takers? What is a checklist, or what do you understand it to be? Is anybody using a checklist?
Is it things to do?
Yes, things to do. Tell me more. Is it something that you have set up for yourself? Things to do before you actually click on that buy or sell button? Is it something that you've put together for yourself?
About the market way. Bullish or bearish. Know the trend first, right? That one
Yeah.
first.
Okay. At least you've got something on that checklist, right? So yeah, go ahead.
I don't know.
Yeah.
Then determine the support and resistance, right?
Supported.
Okay, can
Just hold on for me. Sorry to interrupt you, Raymond.
Okay.
Determine the direction, then find the support or resistance, and then signal, I think.
That's right. That's right. Give me just, sorry guys, just give me a minute. I'll be with you just now. Sorry to interrupt you.
Okay.
Sorry about that, guys. Yes, who was on there? So yeah, we were still throwing those, pointers out there. Give me more.
Okay, perhaps I can say a checklist is like when you have a trading plan, you have a strategy. Then before you enter a trade, there are some things that you need to tick to confirm whether they align with whatever plan that you have at hand, so that you can be able to execute. So things like your pattern, what you are looking for in the market, and be aware of what's happening. Maybe on fundamentals, is the market going to be volatile or not, and whatever that you are looking for is.
Okay. No, that's fantastic. Does anybody have anything to add on to what Mr. Raymond has just said? No one. So
is it something like SOP? Like you said in previous class, right? We bake something, right? You show us ingredient, but it's different. The outcome could be different.
Yeah, a little different. So I guess in the most simplest way I could describe what your checklist is, it's your thought process, right? It's how you engage. I don't want to just say the markets. Let's say the markets, but just generally your work, right? It's that thought process. So, and this checklist needs to be followed religiously, right? You have to follow it day in, day out. There's nothing that must be left out when you open that PC or that tablet to, execute trades. A checklist will help you definitely in many ways, but most importantly, it will help you manage your emotions. Okay, it will help you manage your emotions, because let's be honest, once we involve money, it's emotional already. I don't think anybody can say they're never emotional about it, right? Maybe it's how much you're losing, right? So we can't do away with the emotions when it comes to trading, but we can manage them. We can keep them at bay. So your checklist is there to help you trade in a very mechanical way. Ne? You follow? It's there to help you trade in a very mechanical way so that you follow only the facts as much as possible. Facts as much as possible. So that, because there is no space or room for, I think this is, I hope, that's not what we want to do, right? So one of the first things, well, in no particular order, what are the things that you think should be on that checklist before you actually click on that buy or sell button? What do you need to be looking out for? What do you need to do before you can say, I'm clicking on buy or I'm clicking on that sell button?
I usually start with the fundamentals, check the Forex Factory.
Okay.
Check if
Tell me
there's
more.
anything, if there's anything that may take me by surprise. I don't want to be taken by surprise.
Mhm.
Yeah, so that's where I would start first and try and understand what's going on. And then number two, I would then look at the price action. Just check, are there any, the direction, look at check what the board members are saying, check what the O's are saying, and check if it's collaborated by the direction. And if it's not, then check things like the resistance, the support, if it's going that it's not collaborating with the COs, and then I wait because then I know it's if I close it. Then I wait it out.
Thank you very much. Solid points.
Those are some of the things I would check.
Check your economic calendar. Your economic calendar, of course. Let's say check your economic calendar for, what am I doing? Give me a sec. Scheduled. Scheduled. Data releases. Right? And I'll say check the economic calendar for scheduled data releases. So what websites you said? Forex Factory? Okay, that's one of them. We've got also FX Street. I want to do this. Wanted to make sense. Let me just stretch it out. Okay, I'm gonna do it this way. Forex Factory. We've got FX Street. We have Trading Economics. What other sites would you find? Mind you, most of you actually do have your economic calendar. So whichever user interface makes sense to you, you can use. I know a lot of retail traders use forexfactory.com. FX Street is one that I'm starting to get back to. Trading economics will always be there for hardcore economic data. Anything that I want, when I do my research, I'm going to find on trading economics. I don't necessarily use it for, the economic calendar, but any macroeconomic data that I'm looking for, I'm going to find here, right? And with all these three sites here, you're going to also find the news, right? Because you also need to check for headlines, right? It may be something that's not scheduled for release. It could be a geopolitical event.
Yeah.
Right? Give me an example of a geopolitical event.
Israel, Hamas.
Israel and Hamas. Let me not write it down, right? So we've got Israel,
Yeah.
got Israel, Hamas, we've got Russia, Ukraine. It goes on, right? So these are some of the geopolitical events that you need to, keep up to date and understand what's going on. Especially, of course, in fact, both of them are equally just as important because these are global, economic players. So these are these sites that you would check for the economic calendar. You for scheduled news or data release, you're gonna find headlines as well on those sites as well. But that's not the only place, of course, you can look at. And by the way, trading, ladies and gents, it's you have to be able to absorb and take in a lot of data quickly, right? You need to move. You need to move. You can't be, you read, you analyze, you move, right? That's just basically trading. So geopolitical events, where else can you check for geopolitical events? Well, this has like Reuters. I don't know, maybe let me put it down. Reuters, where is that button that I'm looking for on my keyboard? Okay, there we go. What did I do? I think Reuters is spelled like this. Reuters. We've got Bloomberg. We have, I don't know, say CNN. These various sites. Just give me a sec. Sorry about that. All right, CNN, it goes on, right? Where you can find news, right? CNN, it goes on. I think anywhere you can find headline news. Okay. What else do we want on our checklist? I think so that we don't get confused. And let me make this one number 1. That way it will make sense. Check for geopolitical events. Let's make that number 2. Let's make that number 2, like so. Okay, what's going on with this thing? There we go. Okay, that's number 2. Put a space in between. You made mention of your technical analysis. So
yeah.
let's before I say technical analysis, these 2 points here, you're establishing your fundamental bias, right? You are establishing, you establish Does that make sense?
Yes, good man.
You establish your fundamental bias using the above mentioned points. Number 3, technical analysis. So for your technical analysis, there's a couple of things that you could do. You need to perform Does anybody know what top-down analysis is?
Yes.
Yeah.
Go ahead. Was it Glorious first? I think.
Okay. Top-down analysis is simply trying to know the overall trend of the market from a higher perspective, scaling it down to a lower perspective. That's from a higher time frame, you scale it down to a lower time frame to know what the market is actually doing at a particular time or time frame. So basically, you start from 1A. You want to understand the overall trend of the market, the immediate trend and all that. So
100%. Fully agree with that. Thank you very much, right? So you're trying to establish exactly what direction is the market taking, what type of structures are we working with, right? So 100%. Top-down analysis. So you want to know, is the market ranging? I think let's put these points down. Rather, let's say, what's the market structure? Okay. Are we ranging? Are we bullish? Are we bearish? Right. And by the way, why why do we use these animals? Why do we use these animals? Bulls, bears. Tell me why. Why not a donkey? Why, I don't know, why not a kangaroo? Why bulls and bears? Oh shucks, my PC's battery is dying. Give me a sec. Let me try what's going on today. This thing is plugged in, but it's not charging. All right. While you think of that, just give me a sec. I just want to check what's going on with this thing here. Okay, thank you. Problem solved. Bulls, bears, what do they mean?
I would be lying to you if I would say I know why they're called bears. That nobody has ever spoken to me about that. I just know when it's bears, it's going down. When it's bulls, it's going
going
up.
up,
So, and I
right?
don't know what that actually means. Why they're called? Yeah, I don't know. I'd be lying, really.
Okay. Any takers? No one. Think about it. Okay. Okay. Let's start with bulls. When a bull attacks you, it wants you flat. Right? Sorry. Did I say bull? A bull, when it attacks you, rather, tends to throw you up in the air. Right? Those horns, you land up in the air. I'm sure you've seen it with these festivals that they have in what's that country? I forget, right? That's what happens. So we
Mexico.
associate the movement of price going to the upside with bulls, right? That's how we describe that movement of price. The appreciation of price, bulls, because when a bull attacks you, whatever it gets in contact with lands up in the air. Bears, the opposite. It strikes you down. Right? Makes sense. Right? And then we've had, of course, let's just make sure that everybody understands what we're talking about. Pen. Where's my pen? Okay, so geez, this thing is so slow. Okay, I'm gonna try that again. Right? That's bulls. That's bears. Right? Price is going up. Price is going down. Then we have that. What is that?
Ranging.
Ranging market. And by the way, there are so many terms for the same thing when it comes to trading. So some won't say ranging, some might say what?
Sideways.
Sideways, right? Back then, they used to call this also, there used to be an animal for it when I started. Just to be a lamb market. I guess a lamb is just that animal that's just quiet, doesn't do anything, right? So there used to be 3 animals in general associated to the behavior of price. But over the years, we've lost this one. We only have bulls and bears. Okay, so I think we're all on the same page. So when you are doing your top-down analysis, this is one of the things that you want to establish. What is the general structure of the market? Is it bullish or bearish? Okay. And when we talk about bulls and bears, let me just erase this. Where's the eraser here? Yeah, they really changed this thing up. I don't know how to use it. Okay, there we go. Use the pen. Tell me, how would you describe what a bullish market is?
What, sorry?
A bullish structure or market is. What, if you were to describe that structure, how would you describe it?
It's a structure that's got the higher highs, is it not?
Higher highs and?
Yes, and break the higher high again. Make the new higher high.
Right? I told you, we're going back to basics, right? So this, what would be this high low? High high. Am I right? Having the other side lower. High low?
Low? Yes, higher high.
Higher high. Higher low? Higher high. And so on it goes. Now, if you, and by the way, I forgot, there's another animal which you are. We've spoken about the bulls and bears, but what animal are you? Because you're not a bull and you're not a bear. What animal do you think you are in all of this? Or what animal would you like to think you are? Many tend to say, I'm a lion. No, you're not a lion. Neither are you a tiger. You've watched too many social media posts, motivational posts. You're not that.
Sometimes I'm a bear, sometimes
Right? What do you think you are? Okay, I'll give you a hint of what animal retail traders are. We find them in Africa mostly, right? Nigeria's got quite a couple of them actually. Some even make them, they're brave to make them even pets. I think Glorious would know.
Yeah.
I can try.
A
Hyena.
A hyena. Exactly. So yeah, I know it doesn't, it's not the most socially, appealing animal out there.
What?
But you're a hyena. Yeah, well, what? Because it's not a good looker out of all the animals. But that's but that's what we are, right? We are opportunists. We're always looking for that opportunity. That's all because we don't have the capital to move the market in our favor. We just don't have that kind of money to, move the market in a particular direction for a particular period of time. We don't have that kind of capital. So we are always, looking for an opportunity that we can exploit, just like a hyena. A hyena will trail, these lions as they go and hunt. They'll be a couple of kilometers behind them. They know that these lions are gonna get something. They don't have to work hard, right? They just wait for them to just, pounce on something. Once they're enjoying their meal, what does a hyena do? It's there. It just wants, it just wants to just a piece. Quickly try and, grab it as quick and be out. So that's what we are, right? So we are almost like politicians, right? And not all these politicians get it right, but there's that one politician that has served various presidents in his time, right? He's extremely good. He knows how to adapt, or she knows how to adapt, right? They don't say they go with this particular party, or rather this particular president, but they are willing to adapt. Whatever position you give them, they'll humbly accept, right? We've got one here. I always make an example of him. That's Fikile Mbalula. He's extremely a fantastic politician, if you think about it, right? And we also have Naledi Pandor. Many, I think, in different countries would know Naledi Pandor because she has served on different portfolios, and yeah, she's pretty much done it all. She has served right through so many presidents. I think Thabo Mbeki, Zuma, and now Cyril, right? So what I'm basically saying is we are friends of whoever's in power, and we need to be able to identify that clearly. If it's the bulls that are in control, we need to exploit that. If it's bears, we need to exploit that. We don't fall in love with trade ideas or our point to adapt and be able to change your perspective or your point of view and say, okay, hang on, it doesn't make sense anymore. I'm pulling out, or I'm going this particular direction. I'm changing my direction. Does that make sense?
Sure.
Yes, it's wonderful.
Okay. Lower high, lower low. Right? So that's a bearish structure, that's a bullish structure. A series of lower highs, lower lows, lower highs, lower lows, lower highs. I might as well just finish it off. Now, guys, stop confusing yourself, especially those who have been trading for a little while. Even you are quick to change the most basic of basic things, which is understanding transformation or the structure. Let's just put it that way. The structure. We're busy with, and I'm not taking away from it, right? There are countless strategies out there, how you can interpret price behavior, etc. We've got ICT, I don't know, ATM, CCV, what, you know, there's so many out there, right? Man, if it works for you, that's fine. But I always say simplicity will never be outdated, right? If your house is tiled white, it will still be relevant 10 years from now, unlike using a pink tile. You get the point? Anybody? Maybe that's a lousy example, but I'm trying to emphasize the point that even with your trading approach, your technical analysis approach, the same should apply. Don't spoil it, right? With too many things. With too many things. And I'm still yet to go deeper on this. But since all we excuse me, we're here, and you can see that price goes up, down, 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 up, 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 down, 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 up, 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 down, down, down. I think we can all agree that the market moves in waves. The market has got a rhythm to it, right? And for us to, and somebody said, we need to break higher highs to say we are bullish. I agree with that. So now, if you are doing your top-down analysis and you come to realize this is the structure that you're in, it's bullish, how would you then find your entry? Never mind the fundamentals, never mind how would you, what would inform your entry? Is it too deep of a question for a Tuesday?
Can I tell you what you are saying, like, where will I enter on the upper to uptrend?
Are you saying you're gonna enter here, there, here?
Yes, okay. Yeah, the first higher low name. Okay, I'm gonna leave it like that. Then my entry is going to be on a higher high. Then my stop loss is going to be on a higher low beneath that higher high.
Okay.
I will have to wait.
Uh-huh.
I have to wait it for it.
Sorry, go ahead.
Yes, I was saying before. After I created that first higher high, I'm going to wait for it to create a higher low. Then I will mark my buy stop there at the higher high. Then bring my stop loss at this higher low.
Okay.
Below
So
them.
you're saying you want to see price break the higher high, come back down to a higher low, and then your pending buy stop would be here and
on a higher high.
Yeah.
Yes, brothers. Yes.
Okay. Does everybody agree, or does somebody have a different point of view?
One last thing, because of like that higher high there, it is the third point on the resistance side of the trend line. I think I can see that.
1, 2, 3. Is that what you're saying?
Yes. Yes, yes, yes.
So when you draw a trend line, that acts as resistance, or rather, sorry, as support in this instance, right? Touching. Okay. Okay. Anything else to add? Anybody? Okay. All right. Let's break it down. Let's break it down. What am I doing? Okay, let me just use the eraser. There you go. Okay. Right. Number one, I think let's describe this movement here. What do we call this movement? This big push to the upside before it then starts to come down. Big push to the upside, comes down. Big push to the upside, comes. What do we describe these big pushes as? These big moves?
Impulse.
Impulse, 100%. What's another term that could be used? Impulse, I'm gonna say that's an impulsive move. What
break of structure?
I don't know if I should put it there because I don't use those, you know. Okay. Break of structure. Okay.
Upward trend.
No, the trend is the overall movement.
Oh, okay.
When we break it down and say, okay, this upward trend or bullish trend is made up by a series.
I think some use power move, something like that.
I beg your pardon. What would you call it?
You can call it power move.
A power move. Is that right? Yeah. That's the first one I've heard. Okay. Power move. Some will call it a push. It's also known as a push phase. Okay. Push phase. Right. That's that big move to the upside or big move to the downside. Okay. And then it cools down. That cooling off, what do we call that one? When it comes down a little. Correction.
Yes, correction.
What other term? Just trying to show you that there are many terms for the same thing. So I don't want you to be confused.
Displacement.
Retracement.
Displacement.
Displacement, you say?
Yes. Is it not retrace?
No, definitely that would be a retracement. Some are saying would be a displacement.
Profit taking.
Exactly. Displacement. Profit taking. I agree with that one. This is the weirdest pen. Bear with me. Profit taking. Right. Of course, those market participants who push price higher, when they get to a particular price point or a level of interest, they might want to consolidate their positions, right? And because there aren't enough buyers to continue pushing price, then price starts to come down. That profit taking, right? Profit taking, consolidation, correction, retracement. Those are the terms that are generally used. Okay, so impulse, correction, impulse, correction, impulse, correction, impulse. What is this? This is resistance. I think we can all agree. Okay, this is getting out of hand. Let me try find space. Resistance, if I can write it. resistance. Once we violate or break that resistance and create a new higher high, when price comes back down here, what do we call that level? Is it still resistance?
No, it's support.
It's support. Right? Resistance gets violated, comes back, support. So in other words, when price breaks a level, let's say to the upside, and it comes back down, what was previously resistance is no longer resistance, but support. In other words, the roles change. It's role reversal. It's role reversal. So remember earlier I said, we complicate our approach. And these are the things that you learn from the very start when you are introduced to trading. But we take it a little too far with our technical analysis. When a level is violated, price always has to come back down to it. It's what we expect. It's what I expect. And that's where my entry is going to be. If I didn't catch it here, I'm late. I can't catch it there. I need price to come back down to acknowledge what was previously resistance, because it did act as resistance at one point. Price got here, didn't break him down, violated. Once it violates, and I'm not in that trade, the bus or that train has left without me. Try catch a moving bus. You'll tell me later what happened to you. You get the point, right? So the same should apply here. Wait for the bus to come back, then catch the bus. So what I'm trying to say is you have to exercise a lot of patience. You're not missing out on anything when it comes to trading. There's just ample trading opportunities and ample losing opportunities, if I can put it that way, right? So you have to learn to sit on your hands. An experienced trader or a good trader sits on their hands most of the time, waiting for price to do exactly what they expect it to do, waiting for price to come to their level of interest so that they can be a part of that, of that move. You follow? Does that make sense?
Sure.
Yeah.
Sure. Indeed. So I know it boggles a lot of people's minds, but I don't complicate my technical analysis. Once I've established the structure, I'm identifying those key turning points in the market. What do I mean? In other words, I'm talking about those levels, those horizontal levels, which are, if price is going up, resistance, resistance, resistance. We violate a level of resistance, expect price to come back down. Comes back down, it gives me an opportunity for entry so I can be a part of that move. Right? Resistance, we violate, it gives me an opportunity to enter. Role reversal is something that I always look out for. If price breaks and doesn't come back to my level, it's okay. I'm not chasing price. Don't ever chase price. That's where there's another animal coming in. You become a pig, right? And pigs get what? Slaughtered. So you know that bulls, okay, buy low. Bears buy high. So you're always looking for fair value in the market, and you're going to find it at those obvious turning points in the market. Any question?
Yeah, this is so important. So basically, sometimes, depending on what the market is doing, sometimes you see that, you don't really see much retracement. So when it's like that, you accept the train has left you. You just let it go, basically.
Yes.
That's what I'm hearing.
100%. And it's not going to be the end of your world. Your marriage is not going to fall apart, right? It's okay. Guys,
It's okay. It's okay.
I don't know how else to explain this, but I think you get my point.
Yeah.
It's
But I think, yeah, I think as you say, this is where emotion really beats us.
Mm.
When you see the train has left
Mm-hmm.
and rush, and you even forget that it's gonna retrace, gonna go back to where
The
it
train
violated.
back.
Just that simple common sense. And when it goes back, you start saying, "Oh, why did I go in?"
Why did I catch that?
Why did I do that? Why did I break my rules? I
Yeah.
understand that, So
Yeah.
yeah,
Yeah.
I think emotion. Yeah, I think that
Emotion.
emotion. Yeah, it's
Ah, you
what
said it,
gets you
right?
slaughtered. Markets are merciless. They
Yeah.
really.
And markets indeed are merciless. Markets don't own or owe you rather anything. They don't owe you money, no apology, nothing, no explanation.
Yeah.
Right?
Yeah.
So this thing of people saying on it's it's so easy, it's easy. No. Trading is not easy. Okay. But it doesn't mean that it can be done. Okay. Life is not easy, but we're living it. We're navigating our way through it. And so the same applies for Forex. Okay. But we must dispel this thing that trading is easy. It's not easy. It becomes easier when you're in the know because you know how to maneuver, just like life, right? By observing other people, say, hey, this person did this, took this decision and they didn't turn out well. So maybe perhaps I shouldn't do that, right? But of course, what you don't know doesn't exist. Some other things you have to learn through basic trial and error. But it doesn't have to be that way when it comes to trading the markets. There's just countless information out there and data, right? So we're gonna sift through it and give you the right stuff. So one of them, of course, is definitely your emotions. You need to keep them in check. It's arguably difficult because you're trading in isolation. Okay, you're not sitting on a trading floor in a professional environment where you have got a risk management specialist, you know all these specialists out there. You've got an actuarist, all of those guys. You don't have that. So it's arguably much more difficult for a retail trader because the technical analysis is on you, your risk management is on you, fundamental analysis is on you. What else? What else? It goes on. Everything is on you. That final decision to click on buy or sell, it's on you. You don't have a team of people sitting around you or next to you where you can bounce off ideas. This group here is there to help with that. You are meant to help each other grow, engage each other, share trade plans. It's not a popularity contest, right? To bash somebody else's trade plans when they share them. No, it's to constructively criticize if you have a different point of view, to say, okay, I'm looking at it in a different way. I'm seeing X, Y, and Z, right? And to just share information, right? You are up against extremely smart people. On average, my colleagues, 2 degrees. On the first week of November, I'm attending one is doing a Thanksgiving event, right? She just got her, basically, now she's doctor, she's a PhD. She's an actress, right? We started at the same time. I dropped out of varsity, and this is where she is years later with raising a family, working on her business. She finally has a PhD. She wants to celebrate that. So these are the type of people that you're up against. She's got multiple degrees, right? So, and then you have a lot of dropouts like myself, and possibly some of you here who think it's easy. It's not. Once you underestimate it, you're going to lose a lot of money. Okay. So you're here for a reason. I think you've already established that, hey, this thing is not as easy as it was made out to be. Do technical analysis for 50 minutes and go spend your day at the beach, right? No. But as they say, aslapo, we are not there. Let's move on. So my approach, I'm saying you can use any, provided that you back tested and your sample size is sizable, 100 trades minimum, and then you'll be able to ascertain whether your approach, your technical analysis is working, okay? It yields, decent returns, or you're going nowhere slowly, or actually you're just losing money. But of course, when you do that back test, you have to do it on a demo account, right? So you have to be patient with yourself to be able to actually back test it, right? And not quickly rush to commit capital to that. So my approach, going back to it, it will always be simple. We violate, I expect a retest. Think about it this way: it's like passing your elders at a family function, right? Just passing them. What do you think they're gonna say to you? Especially us Africans, when you just pass your elders, let's say, just walk through them.
They're going to be angry at you.
What are they gonna say? Are they just gonna keep quiet? What are they going to say? You're 10 meters past. What are they gonna say?
Are you not raised well or something?
Likely. They'll probably call you back, right? They say, come back here. Hey, chap. Did you not see us? Right? So the market's the same. You're passing your elders. They say, hey, come back. You come back. Hey, sorry, I didn't see you there. Hey, how are you, Uncle so-and-so? Yeah. Hey, you remember me? Last time I saw you in diapers. Of course, I don't remember you. But that's how it goes. And then after that, you move on. Right? So I make these examples as many as I can because there's no ways you can forget them. Does that make sense? You can't forget them. I don't know how to just clear everything all at once. Yeah, like I said, they've changed this thing. Okay, they've changed it. So just bear with me. It will all be over soon. I suspect somebody's sleeping out there. I've been through this. I did say it's gonna be boring, but we have to go over it, right? We don't have a choice. Okay. Come on. Why won't it allow me? Give me a sec. Okay, there we go. Okay, so top-down analysis, we're trying to establish what is the structure, okay? So we've just gone through those structures. We want to identify those significant levels of resistance. What other terms would we use to describe support and resistance? Demand and supply. Right? All here that you want to definitely, like I said, it's not in any particular order. These are things that just come up to me. So just off the top of my head, you want to calculate your risk. Calculate. And to calculate your risk. Okay. Oopsie, what happened? Are you still hearing me on your end?
Yeah, we hear you.
Is it? Okay. Because on my side now, I can't see the thing anymore. The whiteboard. Let's go. Okay, give me a sec.
You can see your screen.
You can see it. All right. I don't see it. Hold on. Oh, there we go. There we go. Oh, it's gone again. Sorry, guys. Just give me a sec. Let me find my way. Let me find my way to where you are. Okay. I think we're okay. Let me just make some adjustments. Okay. I think that's all right. Yeah. Okay. I can see it. So you want to calculate risk, right? You need to understand exactly what your stop loss value amounts to in monetary terms. If you're using a dollar account, you need to understand if I'm saying I'm risking 20 pips, what do those 20 pips actually mean in monetary value in dollar terms? If it's a pound account in a pound account in pounds, and if it's rand in rands, but you have to understand and know clearly what those pips represent in monetary value, right? The same applies for your the range that you're targeting with TP, right? And so we're going to, I think, talk about risk until it really makes sense to you, right? So we'll do it on another day. We're going to calculate risk. When you do this, of course, this we go as far as talking about, of course, risk reward ratios, right? And you'll get to understand that that's how you are going to enjoy longevity. Like I said, I think probably last week, by opening your PC, right? Opening that trading platform, by default, you're already, your intention is to make money, right? So I don't want you to daydream about that. If there's anything to daydream about, is the risk involved. If you can get that right, you're going to definitely be able to survive off trading. You're definitely going to be able to survive. Even with a 70% losing ratio, right? Or rather, let's say a 30% win rate. In other words, you're losing 70% of your trades. You can still be a profitable trader. Is anybody scratching their head out there?
I just heard that today, Bralep, somebody was having 90% losses, but their 10% is more than what they are losing.
Exactly. You can survive in this if you do it right. If you do it right, you will. I promise you, I'm not selling you hopes and dreams. There's enough people for that on social media. Here we talk financial literacy. So you can survive, right? There are so many hedge fund managers out there. There's one in particular, I think he's got about like a 90% or rather a 10% win rate. But he's managing millions, if not, close to $1 billion. And clearly his clients are still there because, well, he's able to give returns to those clients, right? So it's a longevity game, this thing. Okay. Once you've done that in the technical analysis, you can go as far as this. You can go as far as, I'm just trying to move this thing, but it's not, nothing is working as usual. You can include, of course, your indicators. You can use indicators, and indicators are to be understood very well. Indicators are meant for confirmation. Indicators are not signal providing instruments. Okay, indicators are confirmation tools, right? So I want you to rely on your own analysis and use indicators for confirmation. Okay, and I want you to move away from watching what other people are doing or saying. It only erodes your confidence. Okay, I want you to be able to work on your own findings and put them to the test and accept the loss or the gains from that analysis. Does that make sense? So, and don't be over-reliant on these indicators. I mostly work off a very clean chart, okay, which I'm still going to show you. It's mainly just my moving averages. I'll use 2 to 3 moving averages, but it's a clean chart. It's a naked chart, if I can put it that way. Okay, I'm purely engaging price. That's all. Now, your checklist, there are many things that you're going to add on to this, right? That will make sense to you. Let's say, and I'm going to leave it as is, so for you to add other things. So you may want to look at, say, I don't know, what else would we want? Okay. For some of us, we've got meditation there. Okay, I've got meditation there. Some would be meditation / prayer, might be the same. You need to be, your state of mind is extremely crucial. You can't engage the markets if your state of mind is not okay. If you are, I don't know, under pressure financially, you're going to just only lose more money. If you, I don't know, whatever feeling that you may have, if that one is particularly elevated and it's more to the negative side of things, it's not going to work out for you, right? So you'll need to have some sort of, I have time to myself, at least 30 minutes before, clear the mind, and then it's affirmations. I know exactly what I want to do, what I want to achieve out of the markets, why I want to achieve them. I remind myself continuously of those things. And I also would include on my checklist is, and these are the things that I would do religiously. I do them, in other words, every day, consistently. So one of the guys that I listen, like I said, to a lot of podcasts, a source of motivation. Jim Rohn. Does anybody know Jim Rohn?
No, I
Jim
don't.
Rohn.
No.
One of my favorite. If I think you're all following us anyway on the Forex MG Telegram page. There's this guy that I tend to just throw his short clips. Jim Rohn. That's Jim Rohn, right? I really, everything that he usually says is just, it's always a light bulb moment for me. It makes sense. It's a reminder, right? So Jim Rohn, there are various other guys that you can or ladies that you can listen in on. So those are the things that I would do on a daily basis, right? It's part of your checklist. A checklist is important. I don't want you to underestimate that. Think about a pilot, right? Boeing 747. It's a big airplane. 300 passengers, right? Do they just simply go into that plane and then start it up and on their way they go? No. Right? They have these files. I'm sure you see them when they've got these big files. I'm sure you've seen them in movies as well. They go through a checklist. Fuselage, check. What gauge? Check. This gauge. Check. It's probably like what? 500 pages. Going through every single thing, making sure that every instrument works and works as it should. You think if the flap on one of the wings is a little suspicious, they'll say, we're just flying just 100 kilometers away. Well, it's okay. We'll check it out when we get to the other side. The other side will be heaven or hell. One of the two. They will never ever take that risk, right? So your checklist helps you trade high probability setups. Is that making sense? Are you following?
Yes.
Your checklist helps.
Yes, Sam.
Go
can
ahead.
I have sorry, say, can I have the spelling for Jim? Is it Jim Rom? The spelling?
Oh, Jim Ron is Jim. Jim, and Ron is ROHN. Jim Ron.
Or is it a motivational speaker or
Yes. Fantastic. Oh man. Yeah, I've followed him for many years. Right. He's absolutely fantastic. Yeah, Jim Ron. Okay, so your checklist will help you engage only high probability setups. I think we can move on this checklist. Are there any questions regarding the checklist? Okay, no questions. Before we talk about CPI, I want to understand what is the difference between trading and investing. We had this chat on Friday with the guys after NFP. These are the junior guys that we keep who do, some of the work, some of just the admin and the Forex MG side, or some will give signals, right? What is the difference between trading and investing? It's not a tricky question. It's not a trick question. It's not meant to be a trick one.
Okay, can I try according to my understanding, perhaps?
Yeah, please go ahead.
I can say, starting from investing is, you can put it into two categories, whereby you will be buying something and waiting for its value to go up in the future and selling it after when the value is up, like Bitcoin. Previously it was low, then people are selling it now when it's high, they make money. Then the other thing I can say in trading, investing is also when you trade long positions, I can say. Then I can say trading is like not owning any asset, but making money via the rates when they exchange, like when this other currency pair, we know money, something like that.
Fantastic. Trading, don't really necessarily own the asset. Okay, you're simply speculating on the volatility of price and making a profit in the short term, right? Short to medium term. Investing is more medium to long term. Okay. So how we got to this question is someone was saying, but hang on, S&P 500, NASDAQ, Dow Jones. Do we know those? I don't want to assume that about S&P 500, Dow Jones, NASDAQ, what it is?
Yes, we know